Welcome back, everyone. I am so incredibly pumped for today's explainer because we're looking at the exact strategies you need to escape that exhausting daily grind. Look, most people are stuck trading their precious time for money, day in and day out, until they literally just can't anymore. But there's a different way, a quieter way. We're talking about a strategy where money just keeps rolling in while you sleep, while you eat, and, while you actually live your life. And no, this isn't some crazy fantasy. It's just pure math. So today, we're going to unpack the absolute best passive income investments for 2026.
Okay, let's dive right into Section 1, the active income trap and why working for money is totally broken.
So there's a really sharp contrast here. When you rely completely on active income, you're just trading your time. And here's the unchangeable math on that. Your time is limited, right? Which means your income is permanently capped by those 24 hours in a day. Your boss knows that. The whole system knows that. Passive income, though, it completely shatters that ceiling. By building streams that flow while you sleep, you decouple your earnings from your time, unlocking literally limitless potential.
Now, what's really wild to think about is this single, incredibly frustrating number, 4%. In 2026, the inflation rate is running at about 4%. Meaning, if you're relying purely on a traditional salary, inflation is acting as a silent, painful pay cut. I mean, even if you managed to get a raise this year, it probably didn't keep up with that 4%, did it? Your purchasing power is actually shrinking while you're just running faster and faster on the treadmill. The only real escape from this trap is building income that doesn't need your time to keep flowing.
Which brings us perfectly to Section 2, 5 passive income investments, the quiet way to wealth in 2026.
Let's demystify the exact tools the wealthy use to outpace inflation. This staircase strategy gives you a crystal clear, bird's-eye view of the investments we're going to climb today. High-yield savings, dividends, REITs, Treasuries, and digital assets. You can see the 2026 average yields and the relative effort levels right here. So let's break down each one of these powerhouse tools.
Step 1 on our staircase is maximizing your emergency fund with absolutely zero risk. Now, traditional banks are still paying a totally dismal 0.42% APY. Seriously. But high-yield savings accounts, or HYSAs, from online banks like Marcus, SoFi, or Ally, they are currently paying right around 5.0% APY. It carries the exact same government insurance, guys, but it gives you more than 10 times the return. This is your short-term cash actually working for you instead of just sitting there rotting against inflation. All right, let's see how this builds with our second investment, dividend stocks and ETFs, because this is where real passive income truly kicks in. We're talking about the S&P 500 dividend aristocrats. These are massive, super stable companies, think Johnson & Johnson or Coca-Cola, that have literally raised their dividends every single year for 25 years or more. Right now, they're yielding between 2.5% and 4% annually. And the best part? You do absolutely nothing, and every quarter, cash is deposited directly into your account just for owning a piece of the company. Plus, you get the stock price appreciation right on top of that yield.
But here's the really crucial point. What happens when you just let those dividends reinvest automatically? The staggering number, $1.1 million, is the pure magic of compounding math. If you invest just $500 a month at a 10% average return, which is historically aligned with the broader market, by the way, it transforms into $1.1 million over 30 years. It's just small, consistent amounts turning into serious, life-changing wealth, all happening completely quietly in the background.
Okay, our third investment brings us into the world of real estate, but without ever having to go unclog a tenant's toilet at midnight. I'm talking about real estate investment trusts, or REITs. Notice that giant 90% slice right there? By law, REITs are legally required to distribute 90% of their profits back to shareholders. That's how they dodge corporate taxes, and it's exactly how you can lock in 4% to 8% annual yields in 2026. You just buy one share through your normal brokerage, and boom, you suddenly own a microscopic piece of apartment buildings, shopping centers, and even hospitals.
Moving on to investment number 4, this is the quote-unquote boring investment that really smart people absolutely love. US Treasury securities. We've got standard US Treasury bonds yielding a rock-solid 4.2 to 4.8%, and they are backed by the full faith of the government. Literally the safest investment on earth. But check out that second item, I-bonds. These are inflation-protected. Their interest rate actually adjusts upward as inflation rises, so they directly fight back against that 4% inflation trap we were talking about at the very beginning of this explainer. They are absolutely essential for building a stable financial fortress. And that brings us to our fifth and final investment stream, which honestly might be the most accessible one in human history: digital assets and royalties. The internet never closes, right? You create an ebook, an online course, or a YouTube video exactly one time, and it has an infinite earning window. Platforms paid out billions to everyday creators in 2025 alone. Your content never stops working, meaning the effort you put in on a random Tuesday can literally still be paying you royalties a decade later.
Now, theory is great and all, but execution is everything. Let's get into Section 3, Building Your Wealth Strategy, a step-by-step action plan.
Here is your roadmap, laid out step by step so you don't get overwhelmed. For week 1, keep it incredibly simple. Just move your idle emergency funds to a high-yield savings account so you can get that immediate 5% return. Done. Month 1, open up a brokerage account and start putting just $50 or $100 a month into a broad dividend ETF to get that compounding started. Month 3, take a little time to research and buy one REIT for real estate exposure. And then by year 1, challenge yourself to explore creating just one digital asset. You don't have to do it all at once, you just build these streams one layer at a time.
But to really make all of this work, we need Section 4, the passive income mindset, and shifting how you actually think about earning. Because here is the fundamental difference between the middle class and the really wealthy. You have to stop asking how to get a raise. A raise is just more capped active income. Instead, start asking yourself how you can earn without working more. Wealthy people have income flowing whether they decide to get out of bed in the morning or not. And that isn't luck, guys. It's construction. They actively built those systems.
Which brings us to a truth that applies to every single person going through this explainer. The best time to plant a tree was 20 years ago. The second best time is right now, today. You don't need to be rich to start this process, but you absolutely do need to start in order to get rich. The regret of not starting earlier can feel really heavy, but think about the incredible financial position you could be in just 1 year from today if you just take action right now.
So I'm going to leave you with this question. Which path will you choose today? The people who take 10 minutes to open just one high-yield account this week are going to be on a completely different trajectory a year from now. The people who do nothing, well, they're going to be having the exact same stressful conversation with themselves next year. Take that first step. And hey, if you're already ready for step 2, make sure you join us for our next explainer where we'll be breaking down the exact blueprint to generate your first $1,000 a month in dividends totally from scratch. Until then, keep learning and start building.